Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, it's great to be back, Jim.
Ted, the Canadian federal government will hold a fiscal update July 8th, although they refuse to call it a fiscal update. They're calling it a snapshot. Are we going to get a true picture of what's happening even just now with the Canadian economy? They don't want to put any projections in it.
Well, I don't blame them for not wanting to put any projections, because I just don't think you can really, with any confidence, forecast here, despite the armies of people you may see on business television networks bravely forecasting what earnings will be into the next year and the price of this and the price of that. There is no playbook for what we're going through right now, although the stock market seems to think everything's under control and that the only thing that matters is Fed money printing and that the U.S. economy is trying to reopen. But no, all we can get is a snapshot. It's probably not going to be a very pretty snapshot, but it hasn't been a very pretty time, as you know, and all your listeners know. So we'll just have to brace ourselves for some cold, hard numbers and reflect on what that means. And also, I hope that those responsible for holding the government account will not just dwell on the numbers, but dwell on how we got to where we are. And that's just as important, assessing what we did wrong at the early days of the pandemic, as opposed to sort of what's happened in trying to deal with it in terms of the fiscal situation. Because it's not going to be good, but really, once the government essentially dropped the ball and put us into this mess, for the most part, they didn't have much of a choice but to support the economy and support Canadians to try and get through it.
Is the U.S. Fed creating a corporate zombie nation with all of its quantitative easing or whatever they call it today?
Well, it is hard to keep track of what program is being invented and promoted at any time, Jim. But we sent a note out this morning to our clients, is the Fed creating a corporate zombie nation? And, this stems from a discussion that was on our Ultra Money platform on Friday, where Ralph Paul from Global Macro Investor, thought, well, look, you look at what happened in Europe. You've had for a decade or so, you've had ECB supporting the banks, and what's happened is that the banks have survived, but their equity really hasn't. And the stock, you just look at a chart of European bank stocks, and it's been, a ski slope down for the last 10 years. And his thinking is that, well, this, could be essentially what could be happening in the United States now, where you've got the Fed who's come in with these programs where they're actually buying corporate debt, buying junk bonds in the market, by ETFs on the junk bond side. But they've then on Monday, they re-announced the program, which got everyone so excited, although it was just a re-announcement, essentially, with some tinkering. Yeah, that they're going to come in and buy corporate debt. Now, this opens all sorts of questions, like, well, which corporate debt are you buying, and why did you buy this corporate debt and not that corporate debt? Well, why are you buying this company's bond and not that company's bond? But at the end of the day, what you've got is a situation where you're going to have the government, the Fed, and the government, it's being funded by the Treasury to do this, so it really is the government and the Fed working together, keeping alive a lot of companies that probably shouldn't be kept alive, and that allows them to keep operating at low margins, which makes their competitors, they have to operate at low margins. And everyone wonders why there's no productivity growth in the economy. Well, I'll tell you why, because if you can't earn a decent return on your sales, even if you're a big Fortune 500 company, if you get a little extra cash in the bank, what are you going to do? Well, you're going to say, well, nuts on that. I'm a CEO and I got stock options. I'm going to buy back shares. I'm not going to reinvest in the company. So this is just going to perpetuate that dynamic we had in the last half of the last decade. And it's actually going to speed it up. So, we're a long ways from Halloween, but by Halloween, I expect the corporate zombies in the United States will be roaming the landscape, and they are really going to be doing the work for what we call the D-economy. That's a deflation, debt-driven economy that's could be really devastating to the North American economy, the global economy, because of the large amount of debt out there. Deflation in itself as a consumer, it's not a bad thing. Prices go down, but when everything is going down and consumers are indebted with, real estate or credit card loans or whatever, and companies, are indebted because they bought back shares. I'm thinking of, maybe one airline in Canada in particular that might have been doing that. And then when tough times come, look out. So, there's a problem that's brewing in the United States with this Fed intervention. The Fed chairman, when he appeared when he testified to Congress this week, he tried to walk it back a little bit, saying we're not trying to be the elephant in the room, whatever. But they are still there, and they are the elephant in the room. And this elephant is breeding zombies. And the American free market way is no more. It is just no. It is, and so, and in Canada, it's a little different here. In Canada, we're more. We have oligopolies, which is a different kind of a issue when it comes to productivity. But the U.S., I'm afraid, we're just going to be getting more and more zombies roaming the land, and it's not going to be a pretty picture. I think, for stock market investors down the road. I mean, right now we're getting a sugar high from all the stimulus. Everyone's excited that the economy is reopening and it's going to be great. And you've got corporate, this I believe the LQD, the investment grade ETF, back into, positive for the year, even though, even under the most, I think, even the most cheery, conflicted Wall Street analyst, who's got his eye on underwriting fees and keeping everybody happy, at the Fed and in Washington. Even the most cheery-eyed analyst is going to admit that we're not going to be back to the same level of economic activity that we were at the beginning of the year for a long time, for a year or two at least. So, seeing these asset prices, head up towards, in some cases, new all-time highs. This is the Fed. This is clearly the end of any notion of free markets in the United States, unfortunately, which was established itself as a global leader because of its pro-market society. That's slowly being eroded, crisis after crisis. Every crisis, it just slips away further. And now we've got the new zombie corporate zombie nation, evolving down south, and it's really sad to see. But the question is, for investors, how do you play that? And it's a big force in favor of that D-economy we've been talking about on the show, deflation, and so that side of what's going on would support that economy. There's other, the feds and the government's stimulus is helping the other side, the G side, the government-led inflation side. So these forces are at battle. That's not over yet. We've got a very big fight for who's going to be winning in terms of asset prices over the next 2 or 3 years. Fight's not over, but the zombies are here in favor of the D-economy side.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're chatting with Ted Dixon. Ted, is some momentum building in BC-based building materials?
We put a blog post on Canadian Insider. It's for free, and by the time this broadcast is out there on HoweStreet.com, it'll also be on CanadianInsider.com. You'll also be able to watch our video summary of today of the Wednesday morning report and the videos. I get the report as well for free. What we were looking at was basic materials, home builder and building material stocks. And why were we doing that? Well, there's two BC companies that have caught our eye. Basically, on Monday we had small mid-cap stock. Canwell Building Materials. It announced updated its outlook, which surprised the market. That said the sales were actually growing year over year, and while it reduced its dividend for Q3, it didn't reduce it as much as people expected. And as of today, it was still trading with a 10% forward dividend yield. So that was interesting. And then, we looked at the forestry stocks, and we noticed there was some insider activity at Interfor, which is a Vancouver-based lumber products company. Now, both Canwell and Interfor have a lot of focus in the United States. And as we saw on the Tuesday retail sales report from the U.S., building materials retail sales have been jumping. And a lot of that, I think, is due to the COVID-19 situation, where people have been making home renovations and also commercial renovations during quiet periods and the like. So you've got that, and you've got lower interest rates. So the U.S., you've actually seen an uptick in that. So the nice angle for these BC building material stocks in general. I'm not making a stock recommendation here by any stretch of the imagination. I'm just making putting in perspective here. What caught our attention was that you've got a little bit of sales momentum, which is nice. And generally speaking, you would expect, these building material stocks to do well under a low interest rate environment. So even if you sort of head towards that D economy we were talking about with inflation, interest rates are going to be low. They could do okay. I'm not saying they would do okay, but with low interest rates, low interest rates are the friends of these stocks. We wouldn't expect them to do that well at the end of an economic cycle when rates are going up, and that's exactly what we saw actually at the end of the last decade. These stocks all were under pressure. So if we're at the beginning of the G economy, they should also benefit if we got a little bit of inflation and people want to load up on their raw materials to build before things get more expensive. So it's kind of straddling the line between the G and the D economy for these stocks. So that's an interesting one. It's on our website. People can take a look. And these building material stocks, they don't get a lot of attention. Some people think they're boring, but sometimes boring works, and they're overlooked, and you certainly want to consider them when people still think they're boring, as to when you're reading about them in the newspaper or seeing them on business television networks and the like. You want to look at them while they're still relatively unpopular.
I saw a report, I believe, that said a record amount of foreign money poured into Canadian equities in April. What does that tell us?
Well, I never try to read too much into those fund flows, because it's really hard to drill down. It is a reminder that despite all the bearish narratives you can hear about Canada all the time, I hear it all the time, that Canada is an awful place to do business. Everything sucks here. I hear this all the time. No, everything does not suck here. There are, we do have a few things going for us. We do have assets that are geared towards a G economy. So if you are trying to hedge for that, Canada is one of the go-to places. I'm not saying we are going to go to the G economy, the government-led inflation economy, but it makes sense to have some exposure to that because we could get there. As we talked about at the beginning of the show, it's too hard to predict right now where this will play out, how this will play out over the next 6 to 9 months. Will we get inflation? Will we get deflation? Well, if we get inflation, you want to be in Canadian securities, okay? And, if you believe you're going for deflation, Canadian bonds aren't a bad place to be because, when you compare where the Fed is at and where the Bank of Canada is at, they are on two different levels in that the Fed is much closer, I believe, to having to monetize the debt, whereas the Bank of Canada is nowhere near having to do that. We're nowhere near that. And so as much as all the perma-bearish narrative you'll hear about Canada, our federal government, even with its fiscal update, I'd be shocked if you started hearing about, well, we're going to have to monetize the debt. I mean, I'm old enough to remember when the debt was big enough that, we had to come to grips with it a few decades ago, and we did, and it wasn't through monetization. The United States is beyond repairing their national debt numbers. Okay, you would need multi-decades of super growth to do it, and that's not going to happen unless there is some miracle of innovation and multi-stage innovation left, right, and center, and, let's hope we see that, but I think that's a moonshot type of scenario. So, yeah, keep that in mind when you hear the usual crowd talking about how the loonie is going to 65 cents, 60 cents, or how it has to get there. Just bear in mind there's another side to the equation. And while we have our host of problems in this country, there are some elements to it that international investors will find attractive, but, particularly if we're heading towards that G economy where people need to get into miners, they need to get into gold stocks, they need to, to look for resource names, Canada is one of the go-to places for that.
The app that you can do on your phone, Robinhood, is a no-fee stock trading platform where they even have micro shares. You don't have to buy a whole share of something to trade it. Apparently, in their top 100 list of the most popular stocks, there aren't any gold stocks in there. Does that mean there's still an opportunity for people to get into gold before it becomes, quote, popular?
Well, that's sort of what I was getting at with these building material stocks. I mean, just because something's not popular, of course, doesn't mean you want to get into it. But when the fundamental case is strong and it's not popular, well, that's your window. So right now, gold stocks are taking a rest, I believe, because people are just so enthusiastic with this reopening story in the U.S. and the Fed. So there's been this resurgence of belief in authority, Jim, that the Fed has saved us from the coronavirus, and we're just going to plow through this, and everything's going to be fantastic. Well, we'll see. Let's hope that's the case, but I doubt it. We have the U.S. market on watch for a downgrade. We're almost there. We would have downgraded it this morning, except our U.S. insider sentiment indicator hasn't quite got to where we want to be. We've downgraded some sectors, so insiders are not jumping into this market. There is not a conviction by insiders that, yes, Jerome Powell has everything under control. Jerome Powell does not have anything under control. The only thing Jerome Powell has is a printing press. And until the public start to realize that's all he's got, and they keep believing the narrative that everything is, opening up and the Fed has got everybody's back, and you can't possibly lose money because the Fed is there. Once that narrative starts to change, then gold will start to move again. In the meantime, unless you believe that we're going back to the real thing, a real economy that's going to be, firing on all cylinders, and a big renaissance of innovation and productivity. And if you believe that, then you sell your gold now. Like, there's just no point. But if you believe there's still some challenging times ahead, and I would be in that camp, then, this is a time to be looking for those gold stocks that haven't gone anywhere, maybe have slipped over the past few weeks, that have good fundamentals. But again, you want to be mindful of some gold miners will do better under a D economy than a G economy. High cost miners, you need that D economy where gold's going to go up and costs are going to go down. You don't want to be loading up on high cost miners. I think if you believe we're going to be in for a G economy, an inflation driven economy, you want to stick with I'd be sticking with anyways the sort of the low cost miners, high grade, low cost producers who will really benefit if gold takes off and inflation take off at the same time.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Alberta is making noises of perhaps pulling out of the Canadian Pension Fund. What kind of a blow would that be to the Canadian Pension Fund? How big of a contributor is Alberta?
Well, I think it's more of an administrative blow than anything. It's moving taxpayer money around. I don't think it would it's going to move the needle one way or the other. So, you'd just move some money from where it's being managed, I believe in Toronto, to Edmonton, and you'd have maybe a different management approach. So, it's politics, Jim.
Of course. And speaking of politics, Canada did not get its seat on the UN Security Council. The Prime Minister spent millions giving money hand over fist to African nations, especially to vote for his seat on the Security Council. Are you going to cry tonight because we're not there?
Well, I'm just glad I'm in still in lockdown mode, quarantine mode, because I don't know if I could go out, into public as a Canadian with the shame of not winning a Security Council seat. No, seriously, this is a disaster for Justin Trudeau, or I don't know if we call it disaster, but a major embarrassment. Not only did he spend all that money, but he was distracted when we had blockades in the country, when there was a pandemic. The pandemic response by the government was completely botched. And, it's pretty clear to me that one of the reasons why, but not the only reason, was that he was distracted with this vanity mission to get us a seat on this Security Council for what? What is the benefit? It's never been explained to me aside from, it looks good to have the Canada name on the little place card there when there's a crisis. But look, Canada could have been a permanent member of the Security Council after World War II if he'd really wanted to push for it. And there were all sorts of reasons why we didn't, and it was probably the right decision to do. I don't know, aside from the Korean War, I don't know when that council has done anything of any substance. Maybe some of your listeners can remind me of, some other times where they've actually, acted, that's, turned out to be in the long-term interest of the world. I'm coming up short So we spent the government spent a lot of time, a lot of money, and for what? For what? And Trudeau has to be held accountable for this. And I think he owes Canadians an apology. I think he has to say, I'm sorry we lost. And here's why I think we lost. And I'd like to hear why he thinks we lost. Is it because we don't have enough, we're not pandering to the human rights division in the United Nations? Is that it? Why did we lose, Justin? I'd like to know, why did you blow it? And I think he owes Canadians an answer. And I'd like to hear an answer because he spent so much of my money and so much of his time and his government's human capital going after this, which was a failure. So, and they were relentless, when Stephen Harper was unable to get a seat. And, I don't think it's a question of being relentless here for political purposes. No, he owes Canada an explanation for making it a top priority of his government and failing, okay? So that's why we need an explanation from him. We also need an explanation why he has a foreign minister who, the last time I checked, unless this has been resolved, has some arrangements with a Chinese banking entity. Now, maybe that's been resolved and I missed it, but, I don't want to have any second thoughts about how, what forces are at work when foreign policy in this country is being made. So, the Trudeau government could be vulnerable here. He's really lucky. There is no opposition party right now with a leader. That will change, and I think it's incumbent, though, certainly on the Conservatives to really put a thoughtful approach in terms of how they're going to hold this government accountable for the mistakes they've made, and not sort of get distracted on tangents, which will allow the Trudeau government to easily distract the public on issues of substance into issues of emotion. And that will, the Conservatives are really going to have to watch that because they're suckers for that all the time, Jim. And they'll go down rabbit holes where the Liberals are just, will just make mincemeat out of them politically, and so the Conservatives really have to get smart here too. So it's all right for, it's one thing to say Justin Trudeau made a mistake, but it's another to hold him accountable. And if we can't hold him accountable, then the signal we're giving to Justin Trudeau is it's no big deal. It's no big deal that we spent all this time trying for a seat at the UN. We didn't get it. It's no big deal. And I don't think anybody believes this, but it is a big deal how we failed to contain the coronavirus in the early stages. It is a big deal, but we have to have an opposition that's effective at holding them accountable. So let's hope that the Conservatives are able to do that. And we'll see. I wish them well on that, because for democracy, I'm not trying to make a partisan point here. I'm trying to make a point on accountability and governance. You need to have a thoughtful opposition that can zero in on what's important, and the way the government handled the pandemic at the early days, how it handled the blockades, and how it was so focused on this campaign for this seat in the council. For what? What do you get out of this thing? You don't get. What is the benefit for Canada had we got this? And are we any worse off, Jim, today, knowing that we have lost this seat? Do you feel poorer? Does anybody listening to this broadcast feel that, oh no, now what? What's next in my life? We don't have a Security Council seat. No, no one's worried. People are worrying about, is there going to be a second wave of the coronavirus? Are my customers, are they going to be spending more money next year? Are they going to be buying more of my product? Is my boss going to be, in a good mood for the next 6 months, despite this coronavirus flying around? I mean, that's what people are worried about They're not worried about that whether we did or did not get a Security Council seat. But I can assure you that was clearly at the top of Justin Trudeau's agenda in the first part of 2020. We're paying a price for it. What would the dividends be? And, why did we need it so badly when we've lost it and, no one's, life's going to go on and no one's going to notice the difference.
Yeah. And about 10 years ago, Stephen Harper tried to get a UN security seat, a seat that only lasts for 2 years, by the way, and we lost to Portugal. And I don't recall that event at all, and I don't recall being upset about that time either.
No, the only people that recall it were the Liberals, and this was part of their strategy, I believe, so they could say we got a UN seat and the Conservatives didn't. And I'm not picking a side here, Conservative versus Liberal, but I believe that was part of their strategy, and that is the wrong reason to spend all that time and all that money. And I'd like to hear Justin Trudeau explain to the nation why we lost and why it is now, why we spent all the money that we did and what this means going forward. I would like to hear him explain that, and ideally in Parliament where he can be questioned. I'm not sure Parliament is still sitting anymore. I know he's still at the Cottage, I believe. But I don't watch him. I try not to watch those events, but I believe he's still at the Cottage. And if not, let's get him in Parliament and answer some questions and find out, what's next. What's next now that we're seatless, Jim. We're seatless. What do we do? We'll have to just have to wait and see what the next steps are for the government, because and when he was doing this campaign, what really irked me, I'll tell you, is that he could have used the campaign to pressure China to release the 2 Canadians, right, that are being held hostage by China. But he didn't do that. He didn't say, if we get onto the Security Council, we're going to push countries like China to stop doing diplomacy like they're doing. But no, he didn't do that. So what was the point of all this? It wasn't to promote. It wasn't to promote freeing Canadians who are being held hostage. Well, what was the point? So let's hear it, and I hope the opposition are successful in pushing him on that.
Ted, thank you so much for chatting with us.
Well, thanks for having me back, Jim.
My guest has been Ted Dixon, CEO and co-founder of inkresearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.